Hello, I'm Kelly O'Byrne and welcome to LCG's preview for the week ahead. I'll be discussing key earnings and economic data for the week. So starting with corporate results, on Monday we have Palo Alto Networks. Tuesday is a busy day with Lowe's, Dollar Tree, Campbell Soup, Hewlett-Packard, EasyJet and Sage Group. On Wednesday it's Deere & Co, Burlington Stores, Workday and Thomas Cook. Quieter towards the end of the week because of Thanksgiving in the US, but we do have Mothercare and Majestic Wines reporting in the UK on Thursday. Moving on to the economic calendar, it's a light week with monetary policy meeting minutes from the Reserve Bank of Australia, the European Central Bank and the Federal Reserve. The UK's budget statement will be on Britain's agenda. And finally, the Advanced Manufacturing and Services PMI will give a hint on the health of businesses in Japan, the US, as well as across Eurozone countries. On Tuesday, the RBA meeting minutes will surely be no surprise, with interest rates steady for the foreseeable future and the Australian dollar under pressure of a declining rate differential. Without the support of carry traders, the Aussie dollar depreciation could deepen. 0.75 will be an important level to watch against the US dollar. On Wednesday, the budget statement will be the highlight in the UK. This is the first official statement in autumn as opposed to the spring for 20 years. Released once a year, the document reveals a prediction of spending and income with an updated economic outlook and the government's budget for the coming year. The Brexit situation doesn't make the task easy for policymakers. Here are some of the reasons Chancellor Hammond would increase spending. Low UK unemployment, which means more tax receipts, lower borrowing last year, and gilt markets could welcome more spending. Reasons not to increase spending would be weaker productivity, higher interest rates, meaning higher debt servicing costs, and the safety of keeping a reserve in case of a slowing economy caused by Brexit uncertainties. Chancellor Philip Hammond has already shared his intention to stick to his fiscal policy and keep control on the budget given the EU divorce. His cautious stance is criticised, however, by hard Brexiteers who are in favour of lower taxes and higher spending. One of the Leave campaign promises was indeed tax cuts and 350 million NHS spending per week. Mr Hammond, on the other hand, believes that the country must live within its means at a time of economic uncertainty. Without a clear Brexit deal on the horizon, Mr Hammond is unlikely to provide fiscal gifts on Wednesday's budget statement. As a result, pound traders shouldn't be overly concerned about a potential negative impact on the currency. Of course, the difficult Brexit negotiations, rising tension at the heart of the government, and the declining support for Prime Minister Theresa May will likely keep the bears active in the market. The pound markets will be subject to the risks of sudden and sharp sell-offs, as long as these political uncertainties persist. Later on Wednesday, the Federal Reserve will release its latest meeting minutes. The FOMC could hardly surprise on the upside, given that the market already prices in a December rate hike at 97%. Inflation concerns could once again be brought to the table, yet the impact on the actual pricing will likely be limited after the core inflation advanced to 1.8% in October, after having stagnated at 1.7% over the 5 months before. The US 10-year yields should continue seeing support by the 2.3% level, but US dollar longs would feel uncomfortable in the case of a slide below this level. On Thursday, the European Central Bank meeting accounts will be under close watch. The ECB announced its decisions to reduce its monthly bond purchases from 60 billion to 30 billion euros starting from next year. The QE programme will continue until September 2018 at half speed and will likely extend beyond this deadline, given that the ECB won't stop buying bonds abruptly. The ECB already successfully convinced the market that this move was dovish and that the ECB monetary policy remains accommodative. Because of this statement, the Eurozone yields declined. The Eurodollar eased to 1.1553 on November 6th, then picked up momentum, crucial for short duration traders. If the Eurodollar gains enough in value to compensate for opportunity costs of holding a low yield currency, then the Eurodollar could continue its rise. investors should pay attention to the momentum indicators. A slowdown in the upside momentum could be an opportune time to turn flat. Finally, November flash manufacturing and services PMI data could spice up the week in Japan, the Eurozone and the US. PMI figures will be released on Thursday in the Eurozone and on Friday in Japan and the US. We note that solid German and Italian GDP data have given a push to the Euro bulls last week. Strong data here will likely revive the tactical longs, but the medium-term effect should remain limited. That's all for this week. Thank you very much for watching, and if you wish to catch these videos and more as they're released, you can follow us on social media.